Hey everyone, in this video we're gonna do a deep dive into GMX. We're gonna look at the fundamentals, what I really like about this project, what I think are the major risks and my concerns, and also I'm gonna give you some price predictions and why I believe this project has a lot of potential in the future. Without wasting any time, because this probably will be quite a long video, let's jump into the basics and let me tell you what exactly is GMX. This is an exchange, a decentralized exchange that offers leverage trading, and whatever you're seeing here is pretty much their interface, and it's extremely easy actually to trade with leverage on this platform, and the interface I think is really easy to use. There are two main networks that you can trade on, Arbitrum, which is a layer 2 solution for Ethereum, and also Avalanche. And once you connect your wallet, you can use up to 50x leverage, which by the way they changed just recently. It was up to 30x, but because of all the crypto degenerates out there trying to short the market, I think they found a smart solution to basically increase their profits. You can also use GMX just for simple swaps, just like Uniswap. However, because this is not on Ethereum's mainnet, the fees for gas are quite lower, and also all the transactions are quite faster. Probably in another video we can go over the whole process of trading on the platform and of staking your tokens. And this is one of the unique characteristics of this exchange, that you can earn rewards from the fees of the exchange, and you can do this in a couple of ways. You can stake GMX, their token, and you get around 30% of the fees on the platform, but in the form of Ethereum, which is insane. I haven't really seen any other protocol offer this, and they usually have staking, but they offer rewards in their own tokens. But as we know, this doesn't carry that much value because altcoins are not as stable as Ethereum, and I think this is really a unique selling feature for this platform. And as you can see here, at the moment of this video, the ETH APR that you can get for staking GMX is 9.2%. Just a month ago this was around 6%, so has increased drastically, but it really depends on the fees that the platform is collecting. We're gonna do a deeper dive into this in just a little bit, but also you have another option to stake and get even better rewards, and that's by staking their GLP token on Arbitrum. And here you can get in Ethereum around 30% APR, which of course carries its own risks, which we're gonna look into just a minute. Before that, I want to show you why I'm getting really bullish on decentralized exchanges, especially ones that offer leverage trading. If we look at this chart from the block, you can see that DEX versus SEC spot trading volume has been increasing steadily, and DEXes have been stealing more and more market share from centralized exchanges. Even in the last few months we have actually a higher low on this graph compared to last year. So last year it was pretty steady, around 6 to 7% of the overall trading volume was happening on decentralized exchanges. We had a peak during the bull run in February where there was around 20-25% of the volume going to decentralized exchanges. And currently, after the dip here and after the collapse of FTX, people started losing trust in centralized exchanges, and this is causing another wave of DEXes to pop out, and also for the current DEXes to have a lot more volume. So currently at the time of shooting, we're around 16% of the total traded volume is happening on decentralized exchanges, and I do believe this trend will continue upwards, and we're gonna see more and more people choosing to use decentralized exchanges for many various reasons. They have many applications, and especially in some countries where there are strict regulations like the United States, people choose to use decentralized exchanges, especially some leverage traders that don't have that many options for leverage trading after the collapse of FTX. And if we look into GMX specifically, they have a pretty good dashboard where there's a lot of information about the entire ecosystem, and mainly here on the right you can see the collected fees, and they have been steadily increasing with a big pump here right around the FTX collapse. You can see that they've been hitting all-time highs on fees and also on volume. However, even if we ignore these outliers, you'll see that for the past year or so, the fees and the volume have been steadily increasing, and currently the average volume per day on GMX is between 150 and 300 million dollars per day. By the way, I'm gonna link all the resources that I'm using for this video in the description down below, so if you want to dig into them, feel free to do so. We can compare this volume with several other decentralized exchanges, which by the way don't offer leverage trading. And if we look into this dashboard on Dune Analytics, you'll see that Uniswap is pretty much the all-time leader with trading volume for the past 24 hours more than $1.2 billion. The next one is Curve with almost $600 million. So pretty much according to this dashboard, obviously it doesn't include all the DEXes out there, but GMX will be in the top 5, top 10 of all the DEXes when it comes to trading volume. And if we scroll a little bit further down, there's something very interesting that you can notice here. Here on the weekly DEX volume from December 2021 until pretty much end of 2022, you'll see that the volume, except for several spikes, have been steadily decreasing, which if you remember, it's not at all what is happening to GMX. Here the volume has been steadily increasing, and also the users on GMX platform has been steadily increasing. So this is one of the main reasons actually that I'm really bullish about this project, because the two main things that I'm always looking for in a good project is good tokenomics and also user adoption, growing number of users, growing number of volume of liquidity, and so on. And if we go back to the dashboard on GMX and scroll to the bottom, you'll see that there has been an explosion of new users back from April, and even today we're still growing, and there's still more and more people using the platform for all kinds of reasons. So people use it for swaps, and some more people use it for margin trading. And if you look on the right here, only the new users, again, this number has been growing steadily even through the depths of the bear market. So this stat for me is extremely important. And if we jump real quick to their Discord, it has been a really vibrant community, and I see a lot of people having discussions there. Although this Discord is not that big, it's just around 25,000 people, with around 2,000 people being active at any given moment. But there are ongoing discussions all the time, which gives me a lot of confidence overall in the GMX ecosystem. And if we go back to GMX and GLP, the couple of tokens that you can stake, there's some very important things that we need to look into here, because GMX is obviously the platform's token. It doesn't really have a major utility except for governance, but also it has real power when it gives you returns in Ethereum. If you compare this to something like Uniswap, Uniswap has pretty much even less utility than GMX. And if we go down to GLP, before you decide to buy GLP and to stake it, there's something very important that you need to know, and this is actually one of the main risks that I see on the platform and of the whole system collapsing potentially in the future. This token is the way for the platform to provide liquidity, and that's why they're getting the lion's share of the fees. Around 70% go to the GLP stakers. And GLP pretty much represents a basket of tokens which provide liquidity for longs and shorts on the platform. And you can see how exactly the tokens within GLP are distributed if you click to the dashboard here, and if you scroll a little bit further down, this is the index composition of GLP, and as you can see, there's around 30% of Ethereum, around 2.5% of USDT, and mostly we have USDC, which is around 40% of the total allocation. We also have some Bitcoin at around 18% and some other smaller coins. However, you can see that they're not using GMX, for example, for their liquidity, and they're using either stable coins or pretty much Ethereum or Bitcoin, which means that the volatility of this index will be relatively low. However, the major problem here is if leverage traders start winning at all times and they start overcoming the losses that all the traders on the platform are doing. And you can see this and track this actually in the dashboard. If we go back to the analytics, you can see here the net profit and loss on all people that trade on the platform, and this is pretty much day by day. Here in this purple line you can see the cumulative P&L, and currently it's way down, and that is pretty representative of the market. Actually, we know that most traders lose money over time, especially leverage traders. However, there's this risk that you still need to consider, because there were days, for example, on this one on November 21st, the net P&L was 4 million, actually $5 million. And as you can see, this was by far the highest net earning for traders day ever in the history of the platform. But if we look into the traders profit and loss in general here, you'll see that on most days, on any given day, there's more losses than their profits, and that's of course represented here in the cumulative P&L. So as long as the general rule of life applies and that traders keep losing money, I think GLP will be totally fine, and GMX, the platform, will be able to continue paying returns in the form of staking rewards. There's also another thing that GMX have implemented as a safeguard, and this is visible here. If we go to the trading platform, you'll be able to see that if you want to go long or short, there's a limit to the amount of shorts or longs that could be open, and this is here down available liquidity. The way I understand this is that if, for example, we are in a bear market or in a bull market and everyone wants to go short and long, and there's a high probability that everyone will make money on the given trade, this is another way of GMX to control how many people can open a long and a short and potentially be in profit. And I think this is a very smart way to do this, because I've been in such situations. For example, during the last bull run, I had a leveraged long open on Bitcoin, and at some point the platform just sent me a message and said, I'm closing your leverage position because I cannot afford to pay you all the gains that you're making. So it's really cool to have these safeguards, and pretty much if you're staking any of those tokens, it's like having a part of the casino and making sure that you're locking some of the gains from the fees. It doesn't matter if you trade on the platform or not. Basically, you're benefiting from the stupidity of all the traders out there. While this is still a concern, I don't think it's the main concern. There are a couple of other things that I'm worried about when I'm looking to the fundamentals of GMX. And the first one is that this is a layer 2 scaling solution for Ethereum, or if you use Avalanche, there are additional hoops that you have to jump in order to trade on the platform and also to take your profits out. So whatever Ethereum, for example, you earn here, it will be, let's say, on Arbitrum, and then you have to bridge it back to Ethereum mainnet and be able to cash it out on an exchange. So the process is a little bit complex, and in general, I think not that many people are familiar with layer 2s and are willing to use them. The interface definitely has come a long way, but I still think we're quite far from mass adoption. Definitely the blowout of FTX caused a lot of people to consider DEXes, but we'll need more developments in the space to make everything easy, so you don't have to go through MetaMask, adding a new layer 2, then swapping back and forth between the mainnet and the layer 2, which sometimes it takes 10 days or a couple of weeks to complete the transactions. Also, there are a lot of risk when bridging between the mainnet and the layer 2. There have been a lot of exploits that have happened recently. So definitely I think this is a major risk and a major obstacle for mass adoption of GMX and of their platform. Another major risk that I see is, for example, one of the big dogs like Uniswap adopting or creating on its own a leverage trading platform on their DEX. Since they already have a lot of the liquidity and a lot of the volume, it will be very easy to take a lot of market share from GMX and other leverage trading platforms. So I think this is also something to consider. I'm not sure if Uniswap or any other decentralized protocol is actually working on adding leverage trading on their platforms, but if this happens, it definitely is another major concern that we can see in the overall growth of GMX. However, this could also be taken as a positive, because if, let's say, Uniswap comes out and announces that yes, we're going to offer leverage trading, all the people that are playing the narratives and that are trading the powerful narratives in crypto might look into other exchanges that are already offering leverage trading and buy their token, for example GMX in this case, and they can actually net benefit from this. This also brings me to my last concern about GMX, and that's their tokenomics. While they do have a fixed supply of around 13 million tokens, and as you can see here on the dashboard, most of them are staked, so pretty much they're locked, they're not circulating on the market. However, if we look deeper into the white paper, we can see here that GMX has left a door open if they want to increase the overall supply of tokens. And here I'm going to read it from you. Minting beyond the max supply is controlled by a 28-day time lock. This option will only be used if more products are launched and liquidity mining is required. So definitely this is like a red flag for me, and since this risk is again pretty much unknown, the best way to manage this is through position sizing on your trade if you decide to buy GMX. Before we get into the charts and do some price prediction for GMX, I want to show you what is exactly my investment thesis behind this token and why I believe it could have a really good run in the next bull cycle. First, and the most obvious one that we discussed, is that it has the opportunity to earn you Ethereum by doing absolutely nothing, and this during the bear market I think is a very valuable and unique proposition. Yes, it has its own risks and so on. However, I think it's very powerful, especially when there are many platforms like Celsius and BlockFi that went bankrupt, and I'm pretty sure that people will forget about this and will still look for good interest to earn on some of their holdings. That's just the nature of people. They want to have money without doing absolutely anything, and they're willing to disregard a lot of the risk. The next major point of my investment thesis is that more and more people will be looking for DEXes, and this is actually shown by the graphs that I already showed you. However, also if we look into the total value locked on DeFi Llama here, you will be able to see that Ethereum at the time of shooting has almost 24 billion in total value locked. And then if we scroll further down, we have Polygon on number 4 with around a billion, Arbitrum with almost a billion, Avalanche with 800 million, Optimism with 500 million. However, except for Arbitrum, Polygon, Avalanche and Optimism have their own tokens. ARP doesn't have a token. However, you can play the Arbitrum with GMX, and also GMX offers Avalanche trading, so pretty much you have a stake in 2 of the top 10 decentralized exchanges here, and I do think that there's a narrative that will play out, and that will be layer 2 solutions on Ethereum. I have mentioned this already a few times on my channel, and if this narrative plays out, especially with Optimism and in the future of other ZK rollups that come out, this could be the next wave of the bull market, and definitely there's a lot of potential to grow. Even if you look at the total value locked, we are far behind BSC and obviously behind Ethereum, and if this even doubles or triples from here, the tokens behind these projects will definitely explode. While there are some limitations, like I mentioned, for example, the risk of many traders winning, especially in a bull market, I think that's a real risk, and the high barrier of entry to brand new users to the crypto space, because this is a layer 2 and it's a little bit more complex. It's mostly gonna be crypto traders that wanna YOLO without KYC into 30 or 50x trades and potentially lose money. I still think GMX has a lot of potential, and that's actually represented in the charts. And if we look into the chart, currently we're sitting at around $40, and we have been forming this kind of an accumulation range here between $13 and let's say $65. This is a huge range. From bottom to the top is around 400%. but I still believe that this is relatively cheap if you're buying in this range. Full disclosure, I have a starter position and I entered here around $45. If price dips even further down, or if it shows relative strength, I will be adding to this. I'll be dollar cost averaging through the bear market. However, because of the risk of the exchange and everything we discussed already in this video, this won't be a really big position size for me. However, it will be enough for me to make sure I profit, and I think the risk to reward here is really favorable, because if we look into the total market cap of GMX compared to one of the competitors here, let's use just SushiSwap, which is not one of the best exchanges out there, but it's quite popular. But here you can see that it has around 30 million in volume. If you remember, GMX is easily doing like 8 to 10x more than this, and if we look at the market cap of Sushi, it's around $300 million, which is quite similar to GMX's market cap currently, so $360 million on fully diluted market cap. So even right now, compared to Sushi, I think GMX is quite undervalued, and if we look into the chart, we can use some fib extensions, and if we potentially break out of this range, the minimum targets that I have are here around $100 and then potentially even $150, $60. However, if the narrative that we discussed for L2s and decentralized exchanges plays out, I think that this could be much higher, but definitely I will be taking my first profits somewhere around here, around $100 to $200. Also keep in mind that GMX is currently listed only on just a few exchanges, and most of the trading volume is happening on Binance and on KuCoin. Any exchanges like Kraken or Coinbase might list this in the future, which will bring additional liquidity and will actually provide additional confidence to the users that potentially this token can make them a lot of money. This has happened before. We have seen this in previous crypto bull runs. This is how a small token looks like, and then other exchanges start adding it, and then the volume significantly increases and price explodes. You can probably tell that I'm quite bullish on GMX. Don't take this as financial advice or anything. I just try to present all the facts and all the things that I'm seeing here. I do have a bag and I'm planning to increase my size, and I do believe in this token. And yeah, that's pretty much everything for this video. If you have any questions, make sure to post them down below. Make sure to subscribe if you enjoyed the content, and I'm gonna see you in the next one.